Welcome to Under One Roof MTL, where we are demystifying home ownership 1 week at a time. Welcome back to everybody. LJ Aguinaga of LJ Realties. How was your summer, LJ?
It's been amazing. Thank you so much for asking. How have you been doing?
Very, very good. Very good. It was a nice summer. Fred PICHETTE and Martin Spalding of Fred and Martin Mortgages. I hope you guys had a great summer as well.
I had a wonderful time working probably too much, but had some free time with the family. It was great.
Amazing. Martin, you too?
Yeah, I start the summer and I go, I'm going to take advantage of the summer. I'm going to barbecue every night. I'm going to go to the pool. I'm going to go hiking. And then all of a sudden we're in mid-September and I look back and I go, I'm not sure if I took advantage of the summer.
It always goes too fast, right? I see, well, summer's over. Way too fast. Okay, so if you have any questions at any point, by the way, about real estate, mortgages, you can text us at 514-790-0800. We're going to get to some of your questions today on the show after we check traffic. And if we can't get to them, we promise we'll get to them next week. But first, we have a question for you. And if you know the answer, you could win cookies from Felix and Norton, our weekly trivia question brought to you by Felix and Norton Cookies. You can visit their store at the Blue Haven Shopping Center, 3705 St. John's Boulevard in DDO. If you are the first person to text in the correct response to 514-790-0800, you will get cookies delivered straight to your door. Our question this week, what does the acronym CMHC stand for? 514-790-0800 and make sure to include your name. All right, guys, what is in the news this week? The thing everybody is talking about is happening in a couple of days. Bank of Canada's next interest rate announcement is scheduled for this week. What do we think is going to happen? Martin, let's start with you.
I always look at the data. So what's the data telling us? Data is telling us that the Canadian economy is slowing down. Over the summer, we lost 100,000 jobs. Wages are slowing. The economy shrunk by 1.6% over the last quarter. Most of the big banks are calling for a cut. But there are key numbers to watch out for, including the inflation numbers that are coming out the day before the Bank of Canada announcement. So what's very important is if inflation is down, it'll support a cut. But if it's still high, the Bank of Canada may stay the course. So bottom line, jobs and growth say cut, because jobs are down, growth is down, cut. And if inflation is still up, or if the inflation is down, then that will be the variable that will sort of steer the Bank of Canada in which direction it's going to go.
Fred, what do you think? What are you expecting from inflation? That seems to be the big key factor here.
No, I think Martin says it all, but obviously you have to look at the inflation factors. It's really if the inflation is below 2%, I think we have a rate cut. And it's funny, I was saying earlier this morning to Martin, this is even the Premier of Ontario, Doug Ford, wants a rate cut. He made it clear a couple of times already, Canadian need a release. I think we're going in that direction. Absolutely.
LJ, what do you think?
My understanding is that we're all but at 100% confidence level for this rate cut happening. Call it a 99.9. So I believe that everyone's feeling it. We finally have the jobs report to back it. And therefore, I'm pretty confident that we're going to see at least a 25 basis point cut at this point in time. And I think some of us who are still sitting on those variable rates are praying for that 50 basis point cut. But I won't get ahead of myself.
But I think LJ is going to come later on because after that announcement, we have two more left before the end of the year. And a lot of people are expecting a 0.5% rate cuts. Absolutely.
And not wanting to pile on, but let's face it, the U.S. Fed has a lot of pressure on it to lower interest rates. And if the U.S. is going to lower, pretty sure Canada is going to lower. So I agreed with my two colleagues. I think next Wednesday, we're going to have a 25 basis point cut.
So we're looking at 3 more announcements left for 2025. Is it safe to say that we're expecting 2 out of those 3 announcements would be interest rate cuts?
Well, I would say it's always safe to say, but it depends. We have to see first this one, what's going to come out with the inflation. And then obviously, if the job continue to decrease, yeah, we're going to have harder rate cuts for sure.
The other thing that we wanted to discuss were some new rules that went into effect this summer. So we've been off since June. Lots has happened since then. New rules for co-owners went into effect in August. This mandates all co-owners, even in duplexes, to maintain thorough documentation. LJ, what does that documentation look like? What are these rule changes?
The reality is, this has effectively come to be since 2022. We had a couple different changes in the law. We have what's called the asset management plan now, which means that every co-ownership is required to have a plan for the next 25 years of maintenance on the building that is updated every 5 years. And it goes as deep as getting quotes, adjusting for inflation for the cost of these things, and making sure we can track it and update it so we can budget properly. Because the reality is, properties are only getting older, maintenance costs are only going up, and we need to start budgeting for these things. The second fold of it is making sure that you have financial statements that are up to date for the last 3 years at least, and that you have meeting minutes that are up to date. We used to see some of the smaller co-ownerships in the past be very informal. We'd get together once a year over a glass of wine or some whatever they're drinking, and they'd talk, and that would be it. There would be no formal meeting minutes. But with these law changes, we need to have more documentation, we need to take better records, and we have to have clear indication of the differences between the funds in your contingency fund and the insurance fund or the self-insurance fund, which is effectively the amount of your insurance deductible in a separate account, so that if you do have to make a claim, you're not running around chasing all the co-owners to put in some cash last minute, and we have the funds available to ourselves. So this kind of highlights the things that are now required. Like I said, they've existed since 2022, but everybody has slow played the adoption, and since August 14th, 2025 this year, it's now a requirement by law, and we're seeing everybody kind of race to catch up.
So if you fail to comply, this can devalue the unit or even block transactions altogether.
Devalue the unit, yes. We've already started seeing that because now buyers are a lot more informed and a lot more conscious, and they understand that if the building does not have these things organized, there's going to be a lot of costs coming down the pipeline. And in order to circumvent those costs, well, they're going to want a discount in order to make up for that money. In terms of blocking a cost, I haven't quite seen that yet. And I mean, the notary does ask questions like this and have for a long period of time. Will we see a block transaction? I don't know that I'd go that far quite yet. I don't think that it's become that set in stone, even though that is definitely the principle behind it. What I do think will start to happen is that the government's probably going to start getting flagged, and then they're going to take these flags to start issuing penalties and fines. And that's going to be what we're going to see on the other side.
Makes a lot of sense. If you're ready to purchase a multiplex, by the way, and you want to bring in some passive income, reach out to the Plex Doctor. You can call them at 514-709-6397 or visit their website at plexdr.com. Still to come, is borrowing against my home's equity to invest in financial markets a good idea? We'll have the answer after we check traffic. So one of the things we're going to start doing on this show each week is answering your questions. We really want to focus on the questions that you have. At any point, you can text them into us at 514-790-0800. One of the questions we have been getting a lot, and by we, I mean you guys. Nobody's asking me questions about real estate. They're asking you guys because you guys are the expert. Is borrowing against my home's equity to invest in financial markets a good idea? Fred, Martin, what do you think?
Now, if you want to build wealth and you're responsible and you make a good income, you should, and your plan is to increase your real estate portfolio, why not? It's you taking them, you refinancing your property, or you're taking a line of credit, taking the money out and reinvesting. Of course, there's risks to that, but I think it's a good thing.
When I get asked that question, I go, the first question I ask back, I go, do you know what you're doing? Or are you working with a financial advisor? And if the answer is no to both, I say don't do it. Because everybody goes to a dinner party and the guy or the girl sitting next to you go, have I got a tip for you? And I always say if the dinner guest or the broker had all the answers, they wouldn't be a dinner guest and they wouldn't be a broker. They'd be sitting on a beach somewhere. So if you don't know what you're doing, you're not working with a financial advisor, don't do it.
So as far as you're concerned, nobody takes on passion projects. Nobody is informed and has the right answers to help somebody build wealth and kind of get you to where they're going if they're not sitting on a beach. And don't get me wrong, I love sitting on the beach. But
no, what I'm saying is we're talking about pulling equity out of your principal residence. And for me, that's a non-starter. So if you have already topped up your RRSPs, you've already topped up your TSFA, you're not averse to risk. You realize the market can go up and down, and you have borrowed that money and you have to pay it back. So let's say it's a double whammy. Your investments go down and interest rates go up. I don't know if that's such a great idea after all.
There's risk. There's always risk, right? With any big investment play. And one question,
Absolutely.
the risks, I'd say no.
But we could look at it another way. If you're pulling money out, because I know you're a real estate investor, if you're pulling money out of your principal residence to invest in another property, then I'd be a little bit more motivated to say yes. But if you're going to go into the market, you got to go in with your eyes wide open, because the market can go up as quickly as it can come down. And that is your bread and butter money. That is your retirement money. That is your principal residence that will continue to appreciate as you pay down your mortgage. And all the capital gains that you make on your house, you don't pay taxes on. Capital gains on investments, you pay taxes on.
Very important piece of information. If you have more questions for the guys, 514-790-0800 is the number to text them to. What are bidding wars? This is something that we've been hearing talked about in the Montreal area since COVID, is it fair to say? What is a bidding war? How do they work in Quebec? Obviously, LJ, you're super experienced in this. What are you seeing? What exactly is a bidding war?
So bidding war is very simple. A bidding war is when you have two or more parties who are interested in the same property and they both submit bids, or multiple people submit bids on that property. And effectively what happens is the seller gets to look at the different bids and decide which one they want to go with. Ultimately, they're going to look at price and they're going to look at conditions, whether they waived inspection, whether they have document review, whether it's a cash offer, financed offer, whether they're putting more or less down payment. All of these things come into play, as well as the dates. That's another very important factor in your offer. So multiple offer situation or a bidding war is when people typically offer above the asking price because they're super interested in the property and they don't want to miss out on it, and they probably become very emotionally attached to it. That allows them to kind of go all in on a home. Now, how often are we seeing it is usually the next question. And I'd say that we're seeing it in roughly 25% of transactions right now. So still a quarter, 1 out of every 4, which is still pretty significant. The biggest difference I want to highlight, though, between these bidding wars that we're seeing today versus the ones that we saw during the COVID market of 2020, 2021, even summer 22, was the fact that now people are a lot more budget conscious. It's rare that we'll see somebody go $100,000 over asking, which seemed to be a regular occurrence a few years back. Now, I think one of the largest bidding wars or overbids that I've seen this year was maybe $30,000 over asking. And I've seen a lot of bidding wars get won with $5,000 to $10,000 over asking. So while there are bidding wars still in the market, I don't want people to get scared off with, oh my God, it's the craziness that we saw a few years ago. It's just that, look, buyers are entering the market, houses are still in shorter supply, and you might have people interested in the same property. So make sure you run your numbers, make sure you've done your analysis, bid whatever you're comfortable with. No need to go crazy because there's always going to be another house tomorrow, and move forward with an offer.
Knowing that it seems that interest rate will potentially go down because all the data goes in that direction, you think it will probably increase a little bit, the bidding war?
100%. The reality is that as a consumer, as a buyer, you're typically looking at what's your monthly payment going to be. That's how people budget. The number, the sticker price on the house is ultimately not the biggest factor, whether it's $500, $600, $700. If your monthly price is still $3,000 a month, let's say, in all of those scenarios, you're willing to do it. Yes, your down payment obviously is going to be a little bit higher in the more expensive scenarios, but most people budget on a monthly basis, and thus as interest rates come down, people's buying power goes up. That inevitably leads to prices increasing. We've already seen, I think year over year, we're about 7% increase this year on the island of Montreal, or in the greater Montreal area. So we're already seeing prices increase. There's already a demand and an appetite for this. If we reduce interest rates due to what we're seeing in the economy as a whole, because most of Canada's economy, let's be honest, is really struggling. Toronto's real estate market, Vancouver's real estate market has plummeted. They're down 30 to 40%. But ours is quite stable. And when you add lower interest rates to a stable market that's already been appreciating, well, you're going to get more appreciation and you're going to get greater growth happening at a faster rate.
My question is always why you can't actually see what the amounts are on the other offers. When we bought our house, we knew there were multiple offers, but we didn't know what those other offers were. So you have to decide, do I increase my offer? Do I hope I offered enough? It's kind of scary.
It's definitely scary, but to be honest, the reason why is it goes against the Privacy Act. Everyone is allowed to offer whatever they want. Their conditions all have to be remained private and secretive. And to be honest, I've heard the argument be made several times for it should be an open bidding system. Everyone should see what everybody else is bidding. And the reality is, I'm okay either way, but people who are asking for that are typically asking for that because they feel that they're going to get a better deal on houses. And my honest opinion is that the second you make it transparent, open bidding in the way that everyone can seize it, there's always going to be somebody who wants to show up and show everybody else up and start offering more money because somebody else always has a deeper pocket. And when you can tell them an exact amount to make it a reality, prices will continue to go up and up and up. Whereas when people have to do a blind bid, everyone has that little fear of, I don't want to overpay, I don't want to shoot myself in the foot, and they stay a little bit more humble than you'd think they would.
Now, money is one thing, but are conditions part of the bidding war? Like if there are fewer conditions, then it might trump a higher bid.
Conditions are super, super important. I think we're going to circle back to this in the next segment.
Absolutely. If you're not sure if now is the right time to buy, to put in an offer, give LJ a call at 514-500-4040. He will help you decide if now is the right time. Coming up, we will talk a little bit more about conditions, and more than 60% of all outstanding mortgages in Canada are expected to renew either this year or next year. What can you expect? Fred and Martin will break it down for you after the news. Robyn Flynn, joined by Martin Spalding, Fred Pichette, and LJ Aguinaga. This is Under One Roof MTL. Before the news, guys, we were talking about conditions on offers. Do we want to pick that one up, LJ?
Yeah, so the question that Martin gave me was, price is one thing when you're submitting an offer in a multiple offer situation, but are conditions just as important or possibly even more important? And I would say 100%. I've seen an offer come in potentially with less conditions, whether that's inspection, document review, or really respecting the dates that the seller has asked for. And if you can give the seller more of what they want, even if the price is a little bit lower than some of the competitive offers, then I've seen sellers turn away more money for even a handwritten letter by a young family that wants to buy the property. Especially if you're looking at a seller that's been in a home for 30 or 40 plus years, they have so much emotional attachment to that property that if you can effectively express that you're going to live the same experience and have the same emotional connection and set down the exact same roots that they did, I've seen sellers give up $10,000 to give it to that young family. So prepare your offer. There's so many tips and tricks that we have for buyers. Reach out to us if you want to learn more about those.
I was going to ask one more question. Sorry, Fred, I'll pass it off to you. If you really want the place, do you go over asking, no conditions? Like, what's the craziest way to get the place?
I mean, ultimately, you go as high as you're comfortable to go with the least amount of conditions that you're comfortable to go. I always recommend doing an inspection. I always recommend reviewing the documents. Sometimes we have the documents beforehand, so we can do that preemptively. But ultimately, if you say that you cannot live without this property, then, I mean, go all in, right? It's like a poker game. You can go all in at any point you want. You just understand that you're probably overpaying.
Yeah, Martin, you hear me all the time saying that it's not strictly about the interest rate, it's about the condition. And it's the same way for mortgages, because an interest rate, a 0.05 discount on a rate could make you save as little of $5 to $10 per month on the $300,000 mortgages, which is condition is always important to look at, not strictly interest rate, or probably will, LJ, you'll confirm it, that waiving condition, it's important, but you have to look at certain condition, obviously.
It's super important to understand the conditions and not just waive blindly. And that's why working with a trusted real estate broker is the right move to make sure that your interests are always protected.
I want to remind people that we do have an opportunity to win some cookies from Felix and Norton, so take a stab at our trivia question of the week. The question is, what does the acronym CMHC stand for? If you think you know it, 514-790-0800. We're going to answer that question a little bit later on in the show. Guys, let's go around the table and talk mortgage renewals. I know this is something that people are very anxious about. More than 60% of Canadians have their mortgages up for renewal either this year or next. They could be facing big sticker shock moments right now. Martin, what are you seeing? What are your clients saying? Is everybody stressed?
Well, a lot of people actually took out their mortgages or renewed their mortgages during the pandemic. And so during the pandemic, we're seeing rates of 1.75 to 2.5. And now, 5 years later, they're renewing at, high threes, low fours. And, if we go back a year ago, they were in the fives. So in whole numbers, if you have a $500,000 mortgage, and let's say your original mortgage was at 2.5 and you're re-signing at 4, you're likely going to be paying about $300 more a month, which is a 50 to 20% increase on what you were paying when you took out your mortgage during the pandemic. And for a lot of people, $300 a month is a lot of money.
So, what is the most important first step for homeowners to take if their mortgage is coming up for renewal soon?
Well, you want to start early. Sorry, Fred. You want to take?
I always say you have to look at your budget, look at your number, start early, and see if you would be comfortable with the new mortgage payment at, as Martin says, at 4%. If not, let's say you living on a tight budget, what could you do? Basically, I would extend the amortization will be solution number one. Why? Obviously, by extending the amortization, you are on a 25 years, 10 years later, you're on 15 years amortization left at your mortgage. Bring it back to 30 years. It will actually bring your monthly contractual payment down. And that could be the first solution. But after that, letting stop you to pay your mortgage faster by doing some lump sum every month. But that strategy, it's key. Also, if you have any debts and you feel that you can't keep up with it or you're making the minimum payment every month, please refinance your property, a little step back, pay your debts, start fresh.
What a lot of people are doing, and what we're seeing, a lot of people are calling us up, and they've been hit by this increased mortgage payment on a monthly basis. So they've started to subsidize their lifestyles by loading up their credit cards. And at one point, they hit a roadblock, they hemorrhage. And exactly what Fred just said, at that point, you really got to consider refinancing everything, consolidating your debt under a new mortgage, stretching out the amortization, because the last thing you want to do is, because of poor interest management, you have to put your house up for sale.
Question for you about that. So if somebody has been, let's say, loading up their credit cards, as you say, they're still making their minimum payments, but now their total debt ratio is much, much higher, so their credit score has fallen. Would they qualify to refinance their home to pay down those debts? Would they have to requalify in order to do that?
Well, we'd have to analyze the file. It's just not a black and white answer. So what happens is we build out the file. We look at your monthly obligations, which are your credit cards, your lines of credit, your card payments, school loans, whatever it may be, which is a monthly obligation. And then there's also your mortgage. And there are two ratios, GDS, TS, which we've talked about a lot, gross debt service, total debt service. And then if the ratios work, we can refinance, but you need to requalify. And I hear the word requalify, qualify all day long sitting next to Fred.
What I could add to that is just think like that. If you're refinancing your property, meaning you changing the remaining amortization period and the amount left at your mortgage, that's equal qualification with stress test. What is the stress test? You qualify, let's say at 4% plus 2, you need to qualify on 6%. Like a refinance means, stress test means requalify.
And one last little thing. We often get phone calls and people say, 4.29, that is just an unbelievable mortgage rate. But at the same breath, they're paying 22% on their credit cards. And it's funny, they never talk about that 22%, but they'll hound us because we're talking about 429 or 419 or 399. But what about that 22% you're paying on your credit cards?
Or 29.
Or 29 compounded daily.
That really fires you up, hey, Martin?
Don't get me started.
To find out more about your lending options, get in touch with Fred and Martin at fredandmartin.com. Coming up, our property of the week, plus the answer to our trivia question of the week. What does CMHC stand for? You'll find out after we check traffic. I'm Robyn, that's Fred, that's Martin, that is LJ. You are listening to Under One Roof MTL on CJD 800. As always, it's time for our property of the week. LJ, what do you have for us this week?
Are you looking for the perfect condo in the heart of the plateau? Check out 1803 Apartment B, Rue Masson, a stylish top-floor, 2-bedroom unit just off Papineau. Enjoy open concept living, a sun-filled layout, a private balcony, and access to a shared rooftop terrace with beautiful city views. With trendy cafes, parks, and grocery stores just steps away, this is plateau living at its best. Listed at just $475,000, it's a deal for first-time buyers or savvy investors. Book your visits today at ljrealties.com or call us at 514-500-4040. In terms of restaurants, you're just a couple of minutes away from Mount Royal Avenue, offering a plethora of options for you to choose from.
Awesome. And you're not too far from CJD. You're near the station if you're close to Papineau, so it's not too far for you to go. You can come say hi. Okay, let's get to the answer for our trivia question this week, brought to you by Felix and Norton Cookies, of course. We asked you, what does the acronym CMHC stand for? The answer is Canadian Mortgage and Housing Corporation. Very important term to know, the CMHC. What exactly do they do, Fred?
They insure mortgages for the banks. There's other agency like CMHC. There's 3 in Canada. Just so the people know, we have Sagen Canada, which is another insurer, and we have Canada Guarantee. And again, it's not an insurance on your own, it's on your loan. It's very important. When people put less than 20% down, they pay a premium, and that premium comes from CMHC or in French SCHL that people knows very well, and it's good. It's a good product.
Yeah, there's a big difference though. So mortgage insurance, that type of mortgage insurance, protects the lender, doesn't protect the borrower. If you want to be protected in case of, then you have to take out mortgage insurance to protect your household. Should you pass, then the mortgage will be paid off by that type of insurance. So there are 2 types of insurance, but the insurance that CMHC insures, it protects the lender.
All right. Well, that pretty much does it for us for this week, for our first week back. I think it was a good one. Nobody seems rusty, so that's good news. If
Just a little riled up.
to ask the guys a question and have your answer featured on the show, you can email us at info@underoneroofmtl.com or text us at 514-790-0800. If you want that personalized one-on-one advice, you can get in touch with LJ, Fred, and Martin individually. LJ, where do people go to reach you?
You can stop by our website, ljrealties.com, or if you want to book a meeting with me, go straight to meetwithlj.com. You can also reach out to me on all socials with the handle LJ AGUINAGA. That's LJ AGUINAGA, or LJ Realties. You can also call or text me at 514-500-4040. And if you're looking to free up some time, contact my property management company, Plex Doctor, to take over and give you your time back. You can find us at plexdr.com or reach out to Terry, our partner and property manager, 514-709-6397.
I recently learned that through Plex Doctor, you guys use this really cool app, the Residence Center, where people who are tenants are able to do things like sign up for auto pay for their rent payment. They're able to make maintenance requests. It's really, really cool and super easy to use. So it's a really cool feature for the tenants of the property management company.
Thank you so much for the feedback. We really enjoy using it as well.
Very cool. Fred, Martin, where do people go to reach you?
So if you're looking to renew, you're looking to refinance, you're looking for a reverse mortgage, or if you're a buyer, fredmartin.com. fredandmartin.com.
And fredandmartin.com.
If you missed anything, you can listen to this show in its entirety on iHeartRadio, Spotify, Apple, wherever you get your podcasts. For LJ, Fred, and Martin, I'm Robyn. Have a wonderful Sunday.